September 2008, just 10 years ago, but in many ways a lifetime away. There were rumors something was wrong in the US housing market. A handful of economists spoke up, but their warnings were mostly ignored. In March 2008, the investment bank Bear Stearns went under. But things really began to hit home on September the 15th, when the financial services company Lehman Brothers filed for bankruptcy protection, and the world suddenly realized some banks and big corporations were being less than truthful about the health of their balance sheets, and a global financial meltdown was in the offing. And this is where it all began, at the junction of 49th Street and 7th Avenue in Manhattan. This is the building that used to house Lehman Brothers. Of course, it's Barclays now. I remember thinking to myself at the time, the government will never let Lehman Brothers go. It's too big. How wrong can you be? All the press photographers in the gallery up there, and you're here at this post where we're standing, right, with your head in your hands. You made the papers the next day, every one of them.
I did.
Peter Tuchman's known as the most photographed trader on Wall Street. He's been here 33 years and says he was as surprised as anyone when Lehman Brothers collapsed.
I need you to know that there was anxiety, there was fear, and there was doom. For about a year here, we were really wondering. It changed the whole flora of the financial industry, right? The next day, people were walking around with boxes leaving work. 25,000 plus people lost their jobs. Did I know that the day I was trading Lehman? No.
So what was it that rattled the global economy so badly a decade ago? Bankers were selling what were known as subprime mortgages to people, many in poorer neighborhoods, failing to explain that interest rates would double after 2 years. Subprime loans were sliced up, bundled with good ones, and sold to banks and governments around the world as investments called collateralized debt obligations. And within those, it was impossible to know what was good debt and what was bad. Banks like Lehman gorged themselves on these risky assets, thinking their potential losses would be covered by a type of insurance called credit default swaps. It was a big mistake. When Lehman Brothers went bankrupt, the markets imploded. Some say the world came within a whisper of all-out global financial collapse. Within weeks, Congress passed the TARP, the Troubled Asset Relief Program, a massive bailout by the US Treasury to prop up banks, stabilize the financial system, and restore economic growth.
That means it's a one-family house. It's not a two.
Loretta Hill shows me the New Jersey home she almost lost in the aftermath of the crash. She blames mortgage lenders for approving her for a loan that she says they knew she'd never be able to repay on her salary.
Can you imagine, like, every day waking up and all you getting is these bulk men saying, well, at the end you got to go for foreclosure. You're not understanding the legal terminology. You got kids. You have no money. You don't, you know. It's overwhelming. You don't know what to do. You could have a nervous breakdown. I was emotionally shattered.
10 years on, what's changed to prevent a similar crisis from happening again? At the New York Stock Exchange, Peter Tuchman is confident new rules mean things are more open now than they were 10 years ago.
No, I don't see it happening now. I don't see it happening here. I think people are a little more transparent. I think the market, you have to realize, with all the potential anxiety over the last couple of years in particular, we're still at 26,000. We are at 26,000. I always joke, they always tell me it's such a crazy line. The market tells you what it thinks about what's going on. This is real money in real time.
But at New Jersey Citizen Action, financial justice advocate Beverly Brown-Ruger is not quite so optimistic. She says the Trump administration is turning its back on legislation designed to protect the consumer rather than big business.
The Dodd-Frank Wall Street Consumer Protection Act was passed after the crash, and it included a provision to create the Consumer Financial Protection Bureau, which specifically is charged with protecting the little guy. Unfortunately, the leadership in Washington and the administration and the new director of the Consumer Financial Protection Bureau don't really believe in that mission, and they've changed the way in which that bureau operates. They are no longer putting the little guy above the interests of the industry.
Loretta knows all too well what that feels like and can't believe there's even a chance it could happen again to others.
Why would you want to do that to people? So it's like we don't count. You know, we don't matter. We didn't matter at the time. They just wanted to get the mortgages and, you know, they didn't care about the people.